Hello, everyone. Hope you're all doing well. Just want to review today's action. I think the market looks kind of weak here. And the reason why I say that is because, over the last month or so, we've had this, well, I don't know, even longer, over the last 2 months or so, we've had this kind of flight to safety in the sense that most stocks have been going down, but money's been going into these big tech names, Apple, Microsoft, Google, Amazon. It's not your traditional flight to safety where money goes into, say, healthcare or consumer staples. But the market's always evolving, it's always changing. And think about it. If you're afraid of the market and you got 10 stocks and you got Apple, well, gee, I'll sell my 9 stocks and just put that money into Apple. So most of this market's been going down. The money's been going into these big things. Now, I'm going to, you know what I'm going to do? I'm going to show you right here. I am going to go. Oh yeah, I got a job for or a freelance proposal writer. Okay. I propose if you want to make money, you watch what I'm about to say. I get all kinds of spam. I'm sure you do too. All right, so we follow at Stock Market Jobber the SPY, the S&P 500 ETF. It's an exchange traded fund. That's what ETF means, and it's an ETF that's basically just a basket of the stocks that are in the S&P 500. So you don't really need to overthink it. You don't really need to overthink the S&P index. We could just look at this. This is something that people trade. As a retail investor, you can't really trade the S&P 500. That's all like futures and swaps for institutions, but whatever, you don't really need to. So I want to show you something here. So Spider S&P 500. That means there are 500 stocks in this index or this ETF. We call it an index because in the institutional world, you can't just give someone money and be like, yeah, whatever. You have to have a benchmark or something to judge it against, right? If you are up less than what we're judging you against, you did a bad job. If you were up more, you did a good job. On Wall Street in the institutional world, the S&P 500 is the most important thing. It's what the vast majority of funds compare their performance to. But anyway, let's delve into this. Remember, it's 500 stocks. We're going to look at the holdings. Okay. Remember, I'm going to say this again and again. 500 stocks. Apple, Microsoft, Amazon. All right. Right there, that's about 19%. NVIDIA is another 3%. So that's about 20%. They break up Google for some reason. Okay. But that's 2% and 1.7%. And then Tesla. So basically, you have 6 or 7 stocks that are 20% of this index. 500 stocks, 6 or 7 of them are 20% of it. So, in theory and in practicality, the vast majority of these stocks could be going down. But if the money's going into these heavyweights, these behemoths, if you will, it could, because of their heavy weighting, they could make the benchmark go higher. And if you're in the big stocks, that's great. But sometimes the way the index is constructed can mask underlying weakness. So let's take a look at SPY. And what I want to say is this is kind of my thesis of the day. These big stocks are kind of starting to look weak, and we're going to go through all of them. And I'm just going to show you from a technical position why I think they're looking weak. And, you probably agree with me when you see it, and I'm glad you're here. All right, so let's go to the S&P. It's the S&P 500, all right? Made a little bit of a turnaround, going lower. Now we're going to go over to our technology sector, and this is an ETF that follows the technology sector. And we got overbought. Overbought means something has gotten really ahead of itself, and that draws sellers into the market. But let's go through these big tech stocks where the money has been flowing. All right, first off, Apple. Okay, Apple. This is a really important thing to watch in the market. I mean, this is, oh, come on. Thought I had it all marked up here. But anyway, this is an important thing to watch here. Now, I want you to notice something. Now, let me change the level here because this is, well, I'm not going to change the level, but I'm going to say this is just 183 to make this nice and round. And I'm going to put this up here and I'm going to make this 183. So you can check it out. We don't want to get too precise. In the institutional trading world, this is what people look at. It's not magic. It's not like, we're going to look at our Gann or Fibonacci or Elliott wave. No, we look at levels, trends, and momentum, and that's what I teach. Now, notice here how this particular level, 183, was resistance for Apple way back in January of 22, over a year ago. Markets have memories. That means levels that are important can retain their importance for a while. All right. Notice how resistance here became resistance there. All right. Sorry, it's sloppy here. Gotta fix it. Okay. Now, I'm going to just bring this up closer so we can have a better idea. All right. So here is a close-up chart of Apple. Remember, biggest stock in the market in terms of market cap. We got to resistance, which was resistance way back here. Why would there be resistance at a level that was resistance before? Is it magic? Is it, some kind of psychedelic vision quest type thing? No, it's very simple to understand. There are people who bought back here who regret doing so when the market goes lower, and they tell themselves, man, I made a mistake, but if it ever gets back up to my price, I'm going to get out at break even. So here we are a year and a half later. Apple gets up here, it hits resistance. Not surprising. Now we got through the resistance and it's come lower. And now the 183 level is a support level. Why is it support? Well, the people who sold it at 183 start to regret doing so when the market moves higher. And they tell themselves, I'm going to buy back my shares if I can get them at the same price. I made a mistake. You have to remember that if you're looking at a chart, you are looking at a graphical illustration of supply and demand and investment psychology. If you don't look at that prism or look at the market through that prism, you are not going to know what the hell is going on. Turn off the news, turn off CNBC, stop subscribing to people's websites that don't know what they're doing. They're just regurgitating information. Anyway, Apple, like I said before, right? Some of these big stocks are starting to roll over. We can look at our uptrend there. We've broken it. Basically, our close today was the lowest close in the last 5 days. Okay, now we're going to look at Google. Notice I say Google and not Alphabet. And I say Facebook and not Meta. Now, this chart looks pretty darn weak here. So here is Google, all right, with an L. Resistance became support. How could that happen? Well, remember, seller's remorse. People sold. Market goes higher. For the last, 8 months or 10 months, they thought they'd made a good decision. But then the market eventually went higher and they tell themselves, gee, I made a mistake. I want to buy my shares back, but only if I can get them for the same price I sold them at. So the level turned into support. What is support? It's a lot of investors who are trying to buy things, in this case, Google, at or around the same level. Now, when we get below that, we call it a breakdown. And it's not just symbolic. It's not just like, trader talk. You have to look at the charts through the prism of what does it tell us about supply and demand and psychology. Well, if if for a month and a half here, the buyers came, trader talk, the buyers came alive around this level and just started buying. All right. But now we're below it. What does that tell us? It tells us the investors who created the support with their buy orders are gone. They're out of the market. They have either finished their orders, they cancel the orders. Who the heck knows? But the bottom line is when we break an important support level, we're not just talking, trader talk. We have to view this through the principle of supply and demand. And this is telling us that all of the demand that was in existence over here got absorbed. And now the sellers, if they want to sell, well, those buyers aren't around anymore. So the sellers need to offer their shares out at a discount. And that forces a move lower. All right, so that's Google. Let's look at Amazon. Amazon looks pretty weak too. All right, now we see some interesting, fundamentals here, and I mean market fundamentals. I just want to go out there on a limb and say something. Well, I'm not really going on a limb because that implies risk, but in the institutional world, I'm so sick of hearing, oh, so and so's a former hedge fund trader. You're a former hedge fund trader. You're this, you're that. Well, guess what? A lot of hedge funds suck and they lose money. So just because someone was a former hedge fund trader doesn't mean they know what the hell they're talking about. Now, I guess I'm a little facetious because I was a former hedge fund trader. I oversaw the trading of probably about 15 or 12 different hedge funds. But let's just take a look at the chart here on Amazon. It illustrates some important principles. Resistance can become support. Resistance can become support. Seller's remorse. People sold, market goes higher. They tell themselves, I want to buy my shares back, but only if I can get them at the same price I sold them at. So if you have enough remorseful sellers placing buy orders at the level that was resistance, it converts into support. Here we have the opposite. Support becomes resistance. Buyer's remorse. People bought here. They thought they were great when the market went higher. Assuming they didn't sell, the market goes lower. And a lot of them are like, oh man, I made a mistake. I want to get out, but only if I can get out at break even. So I don't have to lose any money. So if you have enough remorseful buyers placing sell orders at the level that was supported, it can become resistance. This is an example of how you have to look at charts through the prism of supply and demand. Now, let's take a closer look at this. We're going to go to year to date. And this is on the verge of kind of looking pretty weak. All right. The blue team is in charge. The buyers are in charge. We get up to this level that was important. All of a sudden, the sellers come out of the woodwork, starting to trend a little lower here. Notice how today's close was lower than any close over the last week or so. Looks to me like the tide is turning. The blue team, think about it like a football game, right? The blue team is bringing the ball up the field. They are, it's 4th and 1. They're going to go for it, but the defense make a stop and they turn the tide and things start going the other way. We got to resistance. Looks like we're not trending higher anymore. We could go lower. All right. Now let me just bring up Tesla and then I will let you go. Of course, if you have any questions, please email me at my YouTube thing here, whatever it's called, a YouTube handle or email. All right. Tesla. Now, this chart is like was going to be in textbooks in years. Actually, it should be now. Principles I talked about. Support became resistance. How did that happen? How is it that this company that's worth, almost $1 trillion, people trade it all around the world. There's people that drive Teslas, there's people that trade Tesla stock. How is it that the level that was precisely support became resistance? Okay, you with me? I'm going to do a little drum roll. Psychology. Support becomes resistance because there are people who bought who want to get out at break even. Psychology. I know I'm saying it again and again. You have to look at a chart through the prism of what does it tell us about supply and demand and what does it tell us about psychology. If you don't do that, in my opinion, you will never be a good trader. Maybe you'll be okay. It's like golf, right? You'll never be a great golfer unless you learn how to putt. And that's why I suck. I've been playing golf for like 10 years now, and I still suck because I just can't read greens. But if you want to be a great golfer, you got to learn how to putt. If you want to be a great trader, you got to learn where these levels are. Support has become resistance. All right. Support, people bought here, want to sell here. Remember, if you want to be successful, and I think you can, just the fact that you're listening to me right now tells me that you want to learn. You're not just out there, shooting in the dark. You want to learn. It's not as complicated as you think it is. The great traders don't have these super secret patterns. The great traders worry about what levels are important, what's the momentum and trend, and what's the psychology. All right. So hopefully you come back, you hang out with Stock Market Jobber again, and I will talk to you soon. All right, everybody. Thank you and have a good day.